Welcome to the world of home ownership. Owning a home is an important investment, often the biggest one you'll ever make. So let's talk about how to protect one of your most valuable assets. Insurance is the best way to protect your home from unexpected emergencies. With insurance, you pay a little each month to avoid catastrophic financial loss in the future. As a Habitat homeowner, there are two types of insurance policies you'll need to understand. One is your condo association insurance policy, and the other is your individual condo owner's insurance policy. We'll start with association insurance. Your association's policy is what's known as a walls-out policy. Let's dive into what it covers, what it doesn't, and how to make sure your home stays protected. First, it covers the dwelling. Dwelling coverage protects the physical structure of your home, including the walls, roof, exterior structures, and systems contained within the walls of the home. It protects your home from most catastrophic events, except earthquakes, wildfires, floods, moisture issues, insect removal, rodents, and rodent damage. It helps pay for repairs or rebuilding if your home is damaged or destroyed. Just like a sturdy umbrella shields you from rain, dwelling coverage helps shield your home from life's storms. Association insurance typically covers common structures and amenities like mailboxes, fences, and retaining walls. That's great, but as we all know, life sometimes throws unexpected stuff our way. That's why we've got things like employee dishonesty, commercial general liability, and preferred community association management liability coverage. Let's talk about what those are. Employee dishonesty coverage provides financial reimbursement for losses resulting from fraudulent activity and theft. This is a very unlikely scenario, but that's what insurance is for. Association board members can feel safe to make decisions and do their best, and the community can rest easy knowing they are protected from bad acts. It's a win-win. Commercial general liability insurance protects against financial losses due to third-party claims of property damage or bodily injury, like a slip-and-fall event caused by the association's negligence. Negligence is defined as a lack of proper care or attention to property, resulting in harm or damage to others. For example, you've been walking by a pothole in the parking lot for a year without fixing it. If someone trips over that pothole and injures themselves, you're liable. Association management liability coverage is split into three sections: directors and officers liability, employment practices liability, including third-party discrimination, and crisis response. Directors and officers liability protects the association from personal financial losses resulting from lawsuits or legal actions alleging wrongful acts or decisions made while on the board. This allows the board to act in good faith for your best interest without fear of being sued. Employment practices liability insurance protects associations that employ staff or work with third parties such as vendors or contractors. It acts as a safeguard against legal defense costs, settlements, or judgments which can potentially be detrimental to the association's finances if not adequately insured. And if things get really tough, crisis response is there to lend a hand. It's designed to provide associations with the resources and support they need to effectively manage and recover from unexpected emergencies. The crisis response coverage reimburses expenses for medical, counseling, and security following a violent act on the premises that results in serious bodily injury or death to 3 or more people. Now let's talk about what's not covered in the association policy. First is your personal stuff. Things like your cozy sofa or your favorite sweater. Also not covered are personal liability or loss assessments. So there are some gaps, but don't worry, there's a solution. Individual condo owner's insurance is made to go with your association's policy like a lock to a key. When you buy your home, you sign an agreement saying you'll pay your mortgage. You also sign an agreement saying you'll protect your home with an insurance policy. As a homeowner, it's important to understand that if you don't follow through on both, your lender has the right to demand immediate repayment of the outstanding balance. There are 4 basic parts of a homeowner's insurance policy. 1 is the home structure. It depends on the details of your specific condo, but it often includes the bare walls, floor, ceiling, fixtures, cabinetry, plumbing, and more. Basically anything in your home that extends beyond the association's insurance coverage. Talk with your insurance provider and your homeowners association about what you are responsible for and what the association is responsible for. Make sure you have enough building coverage to cover the association's deductible. Next is personal property coverage. This will cover your belongings inside your condo, things like furniture, clothing, electronics, and appliances. If your possessions are stolen, damaged, or destroyed due to covered pearls, personal property coverage can help reimburse you for their value, up to the limits stated in your policy. Be sure to ask about limits on your personal property. For example, if you have $5,000 worth of jewelry, will it be covered? Be sure to ask. Then there's liability and guest medical. If a non-resident comes over and hurts themselves through no fault of yours, you have medical coverage, usually up to $5,000. However, if there's negligence, you can be sued. Your individual condo owner's policy provides you with worldwide liability protection. Any lawsuit that comes after you, such as damage to property, injuries to people, or slander, is covered up to your policy limits, including defense costs. Last but not least is loss of use coverage. If your condo becomes uninhabitable due to a covered pearl, loss of use coverage can help pay for additional living expenses while your unit is being repaired or rebuilt. Let's say your condo is damaged by a fire. You filed a claim. You know the damage is covered, but where are you spending the night? Your loss of use will rent you a hotel or apartment until you're ready to move back in. Remember, you still have to pay your mortgage, whether you live there or not. Or imagine you have a water leak and have to use professional equipment to dry the area. As a result, your electric bill increases. Loss of use can help out with expenses like this as well. Another thing you need to have in your policy is loss assessment. This is what covers you when the claim exceeds the association's coverage. Remember that pothole you never fixed in the parking lot? If a pizza delivery person trips on that pothole, sues, and wins $2 million, but the association's policy doesn't have enough coverage, each resident has to pay their prorated share of the difference. Let's talk about making claims. Imagine this. You get a broken window. What do? Do you file a claim, or do you pay to fix it yourself? You should investigate the cost first to determine whether it's worth filing a claim, because all claims are held against you, so make sure you're only making claims when necessary. But it's not all about paperwork and insurance details. Here are some simple tips to keep your community in good shape. Take care of the buildings, notify management of any problems and fix them quickly. Build up an emergency fund, and pick an insurance plan that handles what could be catastrophic for you. And that's it! Association and Individual Condo Owners Insurance Basics 101. If you have more questions, just ask your trusted insurance agent. Until next time, stay safe, stay insured, and keep that community love alive.